This example begins with a sustained uptrend. When there is a correction, there are clear swing points, mainly comprised of morning and evening star price action. Immediate confirmation of bearish sentiment has been put into doubt in the short term due to the current green candle strongly opposing the early downswing. No bullish sentiment develops. Instead, the market moves more sideways for a brief time before the downward acceleration with 3 black crows price action. Strong gaps in between these large red real-bodied candles with increased volume as well. Bearish sentiment remains, however there is strong support due to the recent 2 upswings and this longer-term support range that still remains highly influential. Large fluctuations in price still shows the market is quite volatile and there is uncertainty, especially with the large doji. Decisive development with the current large green candle to form an ideal morning star. The clear doji on a major support level demonstrates the minor indecision while the market transitions from the first candle's strong bearish sentiment to the third candle's increasing bullish sentiment. Both these candles are proportionally larger to the second candle as well, with increased volume as well in comparison to the second candle, which has comparatively lower volume. The clear outline for a potential uptrend is present. However, the current candle, although green, has failed to trade above the morning star's high, let alone close above it. Though bullish advantage still remains with this being a green candle with sustained high volume, and although it drove down lower, there is a strong wick rejection from the long lower wick. That indicates the market is opposing major selling that takes place. Neutral to increasingly bullish with the current doji, which trades but does not close above the morning star's high, since a strict interpretation would have the highest high coming from the first candle's high, and this current candle just barely closes under that. 1500 also presents a resistance as it remains highly influential as the first major obstacle to a developing uptrend. So it's quite normal for the next candle to be bearish to neutral. It is not a strong bearish candle as it fails to drive down significantly lower. It is also significantly smaller from the high to the low range compared to the previous few candles, indicating lowered volatility as the daily fluctuations in price has decreased significantly, and there is also lower bearish volume on this current day compared to the prior row of bullish candles. The market remains in a neutral to bullish phase as it is unable to clear 1500. However, it still holds up in the short term due to the strong bullish context starting from the morning star. Note how the real bodies of these candles tend to concentrate above 1500, indicating indecisive to bullish price action. When these are combined, they essentially form a longer lower wick, and most of the trading activity is concentrated over 1500. A defined break over 1500 with the current candle surging higher with increased bullish volume as well for a much more likely sustained uptrend. Bullish sentiment remains, but it's not exceedingly strong due to the drop-off in volume to consistent but mostly below normal levels. Stock price begins to stagnate when there is increased short-term volatility and indecision. There is a shift towards a neutral to slightly bearish range due to the consistent influence of the major 1750 resistance, but this is developing into a stable range despite some short-term volatility due to the gradual swing points mainly comprising of morning and evening star price action. A short-lived influx of bullish volume is adequate to take Amazon over 1750 and nearing previous highs, where, not surprisingly, there is significant selling pressure. However, the market is sustained on an upward trajectory, mainly from the bounce off 1750, which presents a firm support. It also helps there's a bullish continuation following this upswing off 1750, very strong vertical climb, minor resting phase, as would be expected near this 1900 resistance, and then there's another influx of bullish sentiment to take Amazon back up to near record highs. A clear example of a downtrend originating from dark cloud cover. This is delayed due to dojis that form. However, the market eventually begins a bearish acceleration with the classic increase in bearish volume as well. 1750 remains highly influential, and as a support to the declining market, it is able to hold. It is only breached during significant spikes in selling that are often short-lived. Like most all stocks in the stock market, Amazon stock was under heavy selling pressure and experienced high volatility during the global decline in early 2020. Despite that, 1750 held firmly, as it was breached temporarily, especially with this strong selling spike. However, the market managed to maintain contact with 1750 with mostly bullish reversal candles and increasing bullish sentiment with the volume as well to form an eventual upswing. At first it was more of a passive rise, not such an increase in bullish volume, but rather an absence of bearish volume due to the downward overextension approaching 1750. However, later on, the market began to stabilize with neutral to bearish ranges similar to the past 2 years to sustain this steep uptrend that was driven up by periodic bullish spikes. Here is a close-up of another consolidation. The market pushes over this major resistance, makes a minor dip in this neutral to bearish range. There is no breach of the now temporary support. That then leads to a bullish continuation. This is certainly no bull hammer, however there is lower wick rejection at the lower boundary here to indicate increased bullish sentiment along with the large green real body. Eventually, Amazon stock price begins to flatten at new record highs, with the highest close at this hanging man, which has the next candle confirm an increasing bearish sentiment. In the process, this also forms a kicking pattern with these two candles, and when these three candles are combined, they form a less strict evening star with the same general U-shaped price action. As would be expected, a strong downtrend emerges. However, it is likely to be short-lived, not only because steep drops like this are normally unsustainable in the long term, but these three candles, while red and bearish, show strong lower wick rejection with their longer lower wicks. That means there were periods during this rapid bout of selling where the market was able to push back up strongly with short-term bullish sentiment. Although there was no significant upswing, the bearish sentiment subsided significantly, approaching this still firm support where more bullish candles begin to emerge. And that is not surprising, as this 3000 boundary remains highly influential.